why would real estate investors use a private lender instead of a bank? And we started, tip of the iceberg on this on the first question a little bit, but used to kind of just level set everyone again, right? The way I think of it, it's kind of like four pillars of investing, ways to get capital in real estate. It's your traditional banks, which if it needs a lot of work, they're probably not your lender of choice to go to, right? There's a lot of paperwork. You never talk to the end of the decision maker. We're talking 60-day plus close probably on some of these. Their ideal bread and butter traditional banks are more of, your retail buyers, homes already updated type of thing.
Yeah.
So that's one pillar. The next pillar then comes down to these asset-based lenders, and then / call it like hard money lenders out there, right? Where their business is not the retail buyers of homes that we talked about, but more like the real estate investor market. And some of these are small groups, which is like a lot of rich guys with funding deals, but they can only do a few at a time. Some of them are larger companies, like Paul mentioned earlier, like RCN Capital, Kiavi, where they're backed by institutional money, and they still have an application process. These hard money lenders and asset-based lenders, but it's a little bit faster than the traditional bank would be. And this is the type of you just got to make sure the property you're buying is in their buy box, essentially. That box kind of changes over time, but like stays pretty consistent for the most part. So you got to be aware of like what the minimum loan size is. I don't know if you want to keep going with that one, Paul.
Yeah, let's dive into that a little bit, Mike, because they do have minimum loan size, most of them of $100,000. Now, if you're purchasing a property for 60 or 70, but it needs 40K in rehab, that qualifies, right? So you can still get it over 100K with that. Let's also talk about, like, you don't need an appraisal with those asset-based lenders, where a traditional bank, you do need appraisal. So the speed of the money is much quicker. They can close in a week, pretty good pace, usually 1 or 2 weeks, call it. Whereas your traditional lender, 30 to 45 days, plus they want 20, 30% down, your traditional lender. So the asset-based lenders are that step up, and you could do it with 10% down. Kiavi has a new program where you can do it with 5% down. Again, that's for experienced investors. So you're still looking, if you're a newer investor, the best you're going to get is 10%. You have to put 10% of your own money in there. And that's why Mike and I like private money, because we can literally get private lenders to fund the entire deal, because they're lending us on the value of what we're picking it up at, which is below market value. So they're still below the as is value on these properties. Plus, if we're going to fix it up at all, and we're going to borrow those funds, we could borrow everything in one lump sum, have the money there, much simpler. We don't have to worry about stages. Like if you're doing it with Kiavi or RCN or Dominion, when you do your rehab, you're going to bring in maybe 3 different stages. So you have to have somebody come in, verify the work was done, then you get paid after you put your money out. So you don't have this with your private lender. So you could pay contractors as needed. So it just gives so much more flexibility, which is why Michael and I like it so much better.
Yeah. And just to close the loop on the asset-based lenders too, is the pricing that they have, it varies by investor experience too, right? Whereas a traditional bank, here's your interest rate, right, that they publish on their website that, varies, whatever benchmark they use. And then for an asset-based lender, right, they might publish a spread of, right, call it, 8 to 13%, interest rate. But if you have a good track record and done a lot of deals with them, you're going to be on the low end of that spectrum. Whereas if this is your first time dealing with them, or just first deal in general, that you're going to be on the high end of that spectrum and paying points on top of that.
Yeah, points are key, right, Mike? You got origination costs, and on most deals, they're charging anywhere from $500 to $1,000 for origination fee. That's just underwriting, right? An underwriting fee.
Yeah.
They call it origination. And then you got points on top of it. So you're 1 to 2 points. If you're a newer investor, it could be 3 points. If you want to go like higher LTV. If you're a traditional bank, you're probably paying a point, right? You got origination, you got all these other things, other costs there. And then you have the lender's policy, title insurance, which is another $1,000, $1,500, $2,000 potentially added on your closing costs when you're buying. Whereas if you're doing a private lender, you don't necessarily need to have that, right? Because you're usually doing these on these short terms.
Yeah.